Welcome back everyone to Old Man Wisdom. It's currently Friday the 11th of February 2022. Just a reminder, if you haven't already, please remember to subscribe to the channel. It certainly helps us grow, and I'm thrilled at reaching 400 subscribers. I know that still makes us a very small channel, but nevertheless I'm grateful for all of those who have subscribed and continue to watch and follow along on the videos that I make. Thank you very much. But let's get straight into the charts. You can see from this blue rectangle up here that this has been the start of the week. Last week we had a buy signal but didn't take it because it was underneath the multi-time frame moving average. And this week the markets have been relatively flat with a little bit of excitement here on Thursday. But we had a sell signal which we didn't take because price is above the multi-time frame moving average. In order to see or to take a sell signal, we would need price to be below the multi-time frame moving average. So what we would want to see for next week is for price to come down and touch the multi-time frame moving average or come very close to it, and then get a buy signal. You'll notice down here that the MACD is right between the two blue lines that I've drawn here. If I just zoom in a little bit, you'll see here that it wouldn't take much now to get a buy signal. What it means is that we want the MACD to come over this, what I call 3 pip mark, and we could well get a buy signal early next week. So that's what I would like to see happen. Price just drop a little bit and then bounce up for a buy signal. For you people who like price action trading, you'll just notice here that we've been plotting the charts for quite some weeks now, and you'll notice here that this blue rectangle represents the start of the week, just like on the previous chart from the EURUSD. But notice the way I've plotted it here. The reason this is a low is because the previous high was broken, which means that this is definitely a low. If this was a zigzag indicator, then correctly it would plot it here with a high here, and this will only become a low, a valid low, if price breaks it. So if price breaks it, this low here, then we can verify that this is a low. And what we would want price to do, if I just zoom up a little bit, is we would want price to come back to this area here. We could put a pending sell order here, and we could put a stop loss just above this area here. This means we would only have a 20 pip stop loss, so relatively tight but with a little bit of wiggle room. We want price to come significantly down past this low here. We don't want price literally to come here before bouncing up. We don't just want wicks to break this low, we want whole bodies of candles to break it. And ideally we want to have a significant break whereby we could have a pullback to this area here. If we see that happen, then hopefully we could see a sell-off occur. Now the reason why I'm also saying that we're in a downtrend, or that we could look for a downtrend or possible sell, is because if we go to the weekly chart and zoom out, what do we see? Well, we see that the overall trend is still down. Now you might say that maybe it's reversed. Now for me, yes, the wick of this weekly candle broke the high here, but the body hasn't broken it. So for me, I think we're still in a downtrend. But what I like about this strategy is that even if price ends up doing the opposite of what I would expect and goes upwards, then we've risked very, very little. You'll notice here that we're literally risking 20 pips in the hope that we can catch a downtrend. The downtrend could well come back to this low here, which means that we're risking 20 pips in order to make nearly 100 pips. So that's a 5-to-1 risk to reward ratio. For me, that's a risk worth taking. Now, of course, price could ping up. It could be that we have broken this high properly and the markets feel that we're now going to continue upwards from this trend here. But for me, there's a good possibility that we're going to see a further pullback. And this would be a significant trade if it played out correctly. So there you go. That's really it. Two different options here. You've got this option from the indicator, whereby we could potentially look for a buy signal based on the MACD. And here we're looking at price action, and we're banking on there being now a reversal on the lower time frame, the H1, but based on the fact that from the weekly time frame, we've very much been in a downward trend for quite some time, in fact since about November. So both of these opportunities could well be playing out early next week, so it's just something to keep an eye out for on the EURUSD in the coming days ahead. If you found any value in this video, please give it a thumbs up, and until the next time, everybody, enjoy their weekends, and I'll speak to you very soon.